Let's get to our guest host this hour. Graeme Maxton is back with us, member of the global think tank Club of Rome, joining us live out of Hong Kong. Graeme, good to see you again. It's been a long time. Too long. So talk to us. What's top of your mind right now? We've all been sort of consumed with this whole taper debate. What about yourself?
Yeah, I mean, I guess that's pretty much near the top of my mind as well. I mean, the question for me really is where is the global economy going? I mean, I always tend to look longer term rather than over the next few weeks. And the world economy is kind of like, it's on drugs right now. I mean, if you look at the basic foundations of the economy, if you look at supply and demand, if you look at growth, it's all being fueled in the West, in Europe, by printing money. And that really is something which can't go on forever. And so what's going to happen is as that printing money tapers off. And that is the big question. Is it going to be a slow decline, or are we going to see the growth picking itself up and moving forward? You know, it's a very difficult economy to read right now. Much easier sitting in Asia. You know, you can see the fundamentals here are much stronger. But for the rest of the world, it's a big question right now as to where this economy is going.
Indeed. And that's the thing. With the world economy, even with all this QE sloshing about from three corners of the globe, the U.S., Europe, as well as Japan, we've still got recovery looking pretty fragile, with the exception of maybe Japan, where, you know, we haven't seen numbers that strong in, I don't know, a couple of decades. But, you know, where financial markets are concerned, though, they have raced ahead so strongly, it seems to almost defy fundamentals. I mean, for the people that you've been talking to, how much worry is there about things looking so frothy in terms of financial markets, especially equities?
Yeah, you know, I get a lot of emails from people who are saying, you know, when are we going to see the collapse? Because they can see there's this complete disconnect between what's going on in the markets and the fundamental realities. That you know, if you look at somewhere like the UK, I mean, 20% of the economy is actually the equivalent of well, that's what the Bank of England's printing. I mean, 20% of the economy is being printed by the Bank of England. I mean, that's a huge amount of cash being injected into the economy, and the numbers are very similar in the US. You know, people keep saying, when are we going to see the bottom falling away from this economy? I don't know. We've been in this state for 5 years, nearly 6 years now, since the crash. We've kept the economy going by printing money, and you know, as long as we keep printing money, we're going to stay like one of these cartoon characters that's run off a cliff. You know, our legs are moving furiously, but we're not actually going anywhere.
Yeah, Wile E. Coyote, I think it sounds like. Europe, you spend a lot of time there, of course. You know, we were just talking about this ahead of the ECB meeting on Thursday, whether or not they're actually going to pull the trigger, keep some powder dry. But, you know, the euro, the single currency, the common currency right now, where it is, that's certainly not helpful.
Well, it's certainly very strong. I mean, if you look at the headlines over the last couple of years, when everybody was talking about the collapse of the single currency and the dreadful debt problems, and yet here we are, the euro is almost as strong as it's ever been. Now, that doesn't seem to make a great deal of sense either, and it's certainly bad for the European economy. It's going to lead to a slowdown because, of course, exports are going to be hit by that over the longer term. So I can see the euro is going to begin to fall away, I think. We're going to see a lot more ups and downs. This is going to take a decade to solve the debt problems there. So we're going to see, I think, you know, a long-term game in Europe. But certainly sitting, you know, where I sit in Vienna most of the time, life is pretty good. I mean, I see these headlines about the catastrophe in Europe, and, you know, life's not bad living there, I can tell you.
Interesting, huh? Okay, it seems to be a bit of an exception, though. Listen, Graeme, back to the whole taper question, though. Dates, when it could start, kind of all over the place. You folks over at the Club of Rome, where are you penciling it in for?
Well, you know, everybody's talking about gradual tapering towards the end of 2014. You know, I think the fundamentals are not actually there yet for the economy to pick itself up. I mean, you see very mixed signals. If you look at unemployment, it's beginning to go down. But if you look at consumption, it's really not picking up in any great degree. There's still an awful lot of threats out there in terms of bank debt, in terms of consumer debt. You know, I think what we might see is them sticking their toe in the water, trying to do some tapering, realizing that things are not going to take off and have any momentum themselves any longer, and have to come back into the market, perhaps, and reflate it again. So I'm not sure we're going to see a dramatic tapering off next year. We'll see a beginning of it. But I don't see that they can take away the financial drugs right now, because the economy doesn't have the strength to pick itself up.
Yeah, not ready for cold turkey. Graeme, stay right there. Come back and talk more with you in just a bit.